My name is Paul Durrance, Investment Director here at True Potential. Starting with stock market returns over the past 24 hours, we saw further weakness yesterday across most major indices. Here in the UK, the FTSE 100 was off 2.5%, whilst the more domestic index, the FTSE 250, was off 2.3%. Elsewhere in Europe, they were also down 1.9%, where travel, leisure, media and oil and gas sectors suffered the steepest falls. US equities also finished lower. The two main stock indices, the S&P 500 and the Nasdaq, were both down 0.87% and 0.09% respectively. The Russell 2000, which is exposed to smaller US companies, was also off 0.26%. Value came under pressure, with energy, industrials and financials being the worst performers, whilst technology and communication services were relative outperformers. There were mixed returns overnight. In Japan, stocks followed the same trend as yesterday, with the Nikkei down minus 1.6%. However, China did buck the trend, as it did on Monday, with their market, the CSI 300 index, up 0.4% at the time of recording. Very strong returns from their technology companies such as the likes of Alibaba. Bond markets yields continue to push higher following the trend from Monday, particularly here in the UK, where the UK gilt 10-year pushed out 4 basis points from 0.79% to 0.83%. And we saw a similar movement when we look in Europe, where we look at the German bond yield, and that closed at minus 0.21%. In the US, it was more of a muted trading session. Yields still pushed out by 2 basis points and closed at 1.61% for the US 10-year. In commodities and precious metals, we saw gold, relatively quiet day for gold, but also silver. They both were up 0.1% and 0.4% respectively. Copper, we saw further big price movements. Copper was up 3.5% over the day. Inflation is very much the buzzword of the moment, with surging commodity prices, supply constraints, and still a meaningful fiscal tailwind. We are seeing higher prices from a broad range of commodities, whether that be timber, base metals, particularly in copper, as I mentioned earlier. Yesterday, we saw a noticeable increase in Chinese producer price index, which is a gauge of what producers of goods are paying for their raw materials and input costs. The year-on-year rate rose from 4.4% to 6.8% over the month, higher than the 6.4% expected, and this really magnifies the scrutiny on today's US inflation report. It's nothing really material over the day, especially when we compare it to Monday's performance, where we saw significant strength in the pound. So if we compare the pound against the US dollar, Japanese yen and the euro, slight appreciation but not really material. On the US dollar front, it weakened at the margin, but again not really notable. In terms of other economic data, it was relatively quiet yesterday. In Germany, we had the latest readings on the economic sentiment, which was noticeably higher than the consensus which was forecasted. In the UK, industry data showed that consumer spending had grown rapidly, which is unsurprising given the easing of government restrictions. While in the US, after last week's relatively poor jobs report, we saw that the number of job openings rose to a record of 8.1 million. The number of unfilled positions from US small businesses are at the highest since the survey began, and evidence of a labour shortage as businesses look to economic data that I'll be looking out for today. Well, it'll be all about that US inflation report. It's released at 1:30 this afternoon. The expectation is for CPI inflation to come in at 3.6% year on year. There's also industrial production numbers coming out from Europe, but I can't see them grabbing much of the headlines. That's all for today. We look forward to bringing you up to date tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.